The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Continuing our discussion from last day, understanding the weeks of the month, week 1, week 2, week 3, the economic calendar, but also hunting out repeatable, rinse and repeat, easy money-making trading setups, whether those are 3 days of breakout traders in the markets, first red day, first green day, inside day trading signals, but more importantly, understanding 3-day setups and 3-session setups, and the weekly template. Now, rinse and repeat means I'm just looking for the same setups over and over again. Monday's day 1, it's the opening range. Tuesday, day 2, typically expands the range. I can hunt out instruments that may be offering me a range expansion opportunity on the front side of the week. Wednesday is day 3, the midpoint range of the week, and it resets to day 1 heading into the back side of the week. Thursday is day 2 on the back side of the week, and we can look for range reversals where we can see markets at extremes, weekly, monthly highs, or in trending markets, potential range expansion or continuation trades, depending on how those templates are set up. Which instrument on the day offers you the cleanest, best, easy money-making trading template for a parabolic opportunity? And of course, Friday, day 3 on the closing range of the week. Just in simple terms, Monday opens the new week. Wednesday is the middle of the week. And Friday closes out the week. Open, high, low, and close for a parabolic opportunity. And of course, Friday, day 3 on the closing range of the week. Just in simple terms, Monday opens the new week. Wednesday is the middle of the week. And Friday closes out the week. Open, high, low, and close. So let's take a look at some different examples of when 3 days of breakout traders are in the markets. A lot of the price action, traders can get lost in the smoke and mirrors, not realizing that the market, although we have price action auctioning back and forth, we're in breakout, our first day of breakouts, and then the market continues to auction sideways before breaking out again and closing in breakout at the low of our month. Now, when we have markets that are putting in closes and breakouts successively towards the extremes of a week or a month, how does price behave? Day 1, day 2, day 3, reset heading into the back side of the week. Traders are looking for reversals, but what does a well-engineered reversal template look like? Building your muscle memory is critical to understand timings, levels, behavior of price, and the weekly template for a reversal setup. 3 days of breakout traders in the markets. We're at the extreme towards the end of a month, week 3, and the last week of the month in a shortened month, and the reversal, third hour club for the parabolic ACB. So differentiating again, getting a move or trying to get in and catch a move or catch the low or catch the high, having a rinse and repeat setup regardless of the instrument that you're trading. This type of behavior repeats on any instrument, and if you think in simple terms, it can happen on any week of the month. We can have a peak formation for a month put in week 2. We can have it put in the last week of the month. We can have it put in on week 3. But these are the signals for us to start paying attention to an instrument that is front side, still continuing to make lower lows, closing in breakout, breaking out again, closing in breakout on the back side of the week at the low of the month, breaking out early in the day, putting in a peak formation, coiling sideways for the parabolic reversal. An ACB template, it's not coming back. Another example, different week, Canadian dollar. Very similar. We have successive days of breakout traders in the markets. Now, this is where traders come up with, it's 7 days of breakouts and whatnot. When a new week starts, we have a new timing cycle. So we can have breakout traders in the closing range of our week starting off that move again. Breakout traders in the market, coiling sideways, breaking out again, closing in breakout on the back side of the week. What type of template do we have? There's only two types: pump and dump templates when you're at an extreme, or dump and pump templates. It doesn't matter what the instrument is. It may put a peak formation in prior in an earlier session, but you want to make sure, if you are going to trade on a template that's already moved in an earlier session, that you do not counter trend a market now that is potentially in an ACB template. Example of the Japanese yen putting in a peak formation on the front side of the week, but we're heading in towards the low of the month. The breakouts continue into the new week. Friday, closing range of the week, closes in breakout. Monday continues that, closing in breakout, and blows off in Asia and working the low, working the low, working the low in the New York session, reversing. Now, great example of a nail and bail opportunity, holding till close. Some traders may choose to leave a trailer on with a thesis that this market may continue on the midpoint range, day 3, back as a first green day type of trade. You'll notice it doesn't close convincingly as a first green day, but this is a first green day behavior of price. Working the low in the Asian session before continuing that move forward. 3 days of breakout traders in the markets. You'll notice it started in the previous week. This is a pullback inside of higher time frame selling. So a lot of traders are like, I caught the low and it's a great trade, and the market rolls over and continues to move now in the direction of the higher time frame breakout. Breakout traders, breakout traders, breakout traders. When a market closes in breakouts, all time frames are involved. Great example, market dumping down early in Asia, coiling sideways into the US session, a 3rd hour explosive reversal back up to closing price. Simple universal entry criteria, but more importantly, Asia, London, New York, a 3-session setup, page 37 in the playbook. Different month. One question that I often will get is, do you stop trading at the month of December or anything else? No, I don't do anything different. I don't trade when the US markets are closed, but regardless of what month it is, what holiday week it is, or anything else, what setup are you hunting? It doesn't matter if Powell's speaking at 3 o'clock. If I have a setup in the US session, I'm going to take that trade. Now, often if we have high impact major red news, I may look at cross rate pairs. We have major pairs that can close in breakout, but we can also look at cross rate pairs to see potentially what instrument may offer us the cleanest setup. Day 1 of breakout traders in the markets. Coiling sideways, breaking out and closing in breakout again. You'll notice all this price action is inside of the day that has closed in breakout. From the peak formation high, breakout. So all this catching highs and swings and everything else, you're inside of a higher time frame breakout. That market continues and closes in breakout again and blows off onto the low of the month before offering again the 3rd hour, the 10 a.m. reversal club, a nail and bail situation back to the low of the day. Christmas time, I wouldn't be holding on to anything. I'll be taking the money and closing the trade. Peak formation made in Asia, dumping and coiling, similar to what we saw in different template into the US window for the 10 a.m. continuation hold till close opportunity. Another example on the Canadian dollar. 3 days of breakout traders in the market. A market starts a new week and pumps back up into shorts that have driven that move before closing in breakout again. Day 2 shorts in the market, pumping up and dumping on day 3, closing in breakout into the backside of our week. Day 2 into the backside, a very similar example, some major red news, but the explosive reversal back up into the close that continued as a first green day trade for traders in the London session. 3 days of breakout traders, low of the month, the beginning of a new month, peak formation reversal, and the ACB template. Now here's an example of how a new month and a new timing cycle can get traders trapped into the wrong direction, chasing the move or the momentum in one direction. We have a new month starting. The backside of that week, we have breakout traders triggered into the market. The week closes, triggering breakout traders again. Monday triggers the high of Friday, trading back up into the high of the month made on the previous Monday. coiling sideways, day 1. Day 2, closing in breakout again into the peak formation high of the month. A lower low, a break of a daily level, closing as a first red day. I repeat the phrase of building your muscle memory on easy money-making trading templates, not just blindly trying to sell into breakouts or buy into breakouts, but understanding the templates where it's easy to make money on. 3 days of breakout traders in the markets. Friday's high of day level has been broken out of. Coiling sideways, a first red day template, and the U.S. session ACB collapse all the way down into breakout traders from the previous week. And that brings us to our current week, and traders had an opportunity on several different instruments for similar reversal type trades. We had market that broke out the previous Wednesday election week. We had large volatility last week, and that market pumped back up into the breakout. An inside day on Friday, a signal day. And that brings us to our current week, and traders had an opportunity on several different instruments for similar reversal type trades. We had market that broke out the previous Wednesday election week. We had large volatility last week, and that market pumped back up into the breakout. An inside day on Friday, a signal day. And that brings us to our current week, and traders had an opportunity on several different instruments for similar reversal type trades. We had market that broke out the previous Wednesday election week. We had large volatility last week, and that market pumped back up into the breakout. An inside day on Friday, a signal day. But it was also a double inside day. Double inside days, page 74 in the playbook. They're not common, but they do show up. We've had a few of those in the last few weeks. Can be an indication of a potentially explosive move. Double inside days are a market coiling for a potential explosive move. So on the front side of the week, traders want to be aligning themselves with a market now that is potentially going on a range expansion. It's broken outside of the inside days, double inside day. We've got breakout traders now in the markets. Tuesday closing in breakout, Wednesday closing in breakout, and breaking down in our Asian window. 3 days of breakout traders in the markets. We have a major red news at 8:30 PPI. That the market broke down on PPI major red news before coiling into the 9 a.m. explosive parabolic reversal back to closing price. Now understand, when you have these types of opportunities, low of the month, low of the week, in a reversal template, a dump and pump template, rinse and repeat, scale it up in size. Now, when a major pair closes in breakout 3 days in a row, we had a few instruments that did that. What type of template do we have on the day? Now, for example, we had the US Canadian 3 days of breakout traders in the markets. What type of template do we have on the day? We have a peak formation low made in the Asian window before pumping higher. What type of template do we have on the day? If this template doesn't align for a reversal, it may be offering traders a continuation trade after major red news. But more importantly, we have a major pair closing in breakout. We can look at cross pairs that have closed in breakout. We have British pound, Canadian dollar. It's imperative that you don't just constantly look to try and counter trend a market that's potentially driven by higher time frame traders. This market is dumped down into closing price in the London session, put a triple bottom in place. We may now have the low of the day locked in on this instrument. Major red news pumps back up to the high of the day before dumping down into our New York Open for an explosive continuation trade in line with the existing trend. Now, this is not the type of template that I'm hunting after 3 days of breakout traders. Nothing wrong if traders choose to look at that. But more importantly, I may have wanted to look at the cross pairs between instruments that have closed in breakout 3 days successively, major pairs. We have the British pound and the Canadian dollar. When we look at the British pound Canadian cross rate pair, we had an inside day on Wednesday. We have a market that broke out previous Wednesday, election week again, closing in breakout. That started the breakout process. These two blue lines are representing Monday's high-low of the day, the previous week's opening range. You'll notice there are only three things that markets do. We talk about this constantly. Breaks out, pulls back without taking out a high of day level, and breaking down again, closing in breakout on Monday. Breakout, pullback, continuation. So traders are calling all these touches of lines new day counts, new cycles, new swings. No, we have breakout traders in the markets. It's as simple as that. The new week starts a new timing cycle. We have an opening range, closing and breakout. Day 2 expands the range on the front side of the week, closing and breakout. We have an opening range breakout now. Breakout traders, higher time frame traders driving this market. We have an inside day. An inside day can offer two potential types of signals for us. Page 69 in the playbook. What type of template do we have? Where does it show up in the template within the month? So we're 3 weeks into the month. We have an inside day after 3 days of breakout traders in the markets. We can look for a potential reversal on the backside of the week of where breakout traders are trapped or triggered into the market on a break of the inside day and potentially targeting the reversal high of day on the other side. This is a beautiful, well-engineered template on the day. And what's important about the inside day is that often in this type of template on the backside of the week, this is a market that potentially will not come back. If they come back, they allow traders that are short on the breakout of the inside day to get out of a losing position. Understand, this is a template now where traders have the opportunity to potentially scale in on a 90-10 opportunity that is not coming back, as opposed to trading markets that will come back. Is this a pump and dump or a dump and pump well-engineered template on the day after 3 days of breakout traders in the markets at the low of the month after major red news? Currency 4-hour rotation begins at 9 a.m. We're at the low of the month. Rinse and repeat means looking and hunting these types of setups throughout the month on any instrument when we have markets giving us signals that they potentially are now at extremes. Universal entry criteria, page 29 in the playbook, removes analysis paralysis, timing, new hour, new 4-hour cycle. It's an ACB dump and pump template. Gold also had 3 days of breakout traders in a market that has been breaking down since the end of October into the new month. Elections continued that move, a bit of pullback, again breakout pullback, breaking down into the new week. So if we just back this up a tiny bit, excellent question is, when do you begin the week count? Well, obviously when a new month starts, we can have a new week 1, but when we have a market at the end of a month starting our move, this peak formation can become our week 1 when the market breaks out the following week. What time frame is driving this market, in what direction? We have higher time frame traders now, all time frames involved, driving this market. We go into our third week, week 1, week 2, week 3, blowing off in the direction of our higher time frames driving this move, and day 1, day 2, day 3 days of breakout traders onto the backside of the week. How does price behave on the day? Timings, levels, behavior of price. Asia puts a low in place, breaks down, puts a low in place. Europe continues to auction lower before reversing in the London window and resting on top of that Asian low. Pushing higher, we had major red news at 8:30. This market continued to push higher into our second hour, and our 10 a.m. club sees the parabolic explosive move back to closing price. Now, a bit more of an escalator type of behavior, contrasting that with the pound Canadian. Still, the most important thing is to not be counter trending a move now that is potentially reversing the market. So differentiating this template from some of the other major pairs and cross rate pairs, it's which one could you have held on to the easiest or scaled into the best? Similar templates, different type of behavior. Now the 10 a.m. club, a beautiful move back to the closing price, 100 pip parabolic move in under an hour. A beautiful dump and pump template. Remember, there are only 2 types of well-engineered charts on the day: dump and pump and dump. Staying away from science projects. Keeping it simple. Allowing the bigger picture to tune you in to easy money-making templates, and then how does price behave on the day? Timings, levels, behavior of price. Rinse and repeat means exactly that. not trying to figure out what a market might do, not trying to get in early, hold on to it. Depending on what your personality, your makeup, your beliefs, your skill set, your ability to manage yourself, not doing anything self-sabotaging or positioning yourself into the market as it's potentially about to explode and not come back. Now, I like the inside day on the British pound Canadian. As I said, when you have a signal day like that, there's a high probability the market will not come back because it allows traders who are on the wrong side of that market to get out either with a smaller loss, no loss at all, or even a small profit. An ACB template is exactly that. It's not coming back, and there's a reason for it. Rinse and repeat, traders. Keep it simple. Build your muscle memory. Sit on your hands. No science projects. Rinse and repeat, and may the markets go with you. Have a great day.